Okay, really excited to be back. Really missed everyone. Hope you've missed us too. Please get your questions in. Believe it or not, a lot has happened over the last few weeks. Data, intel, transactions. We are flush with information today. And as you all know, that's what we're here to do, and give you all of the relevant updates, all of the market intelligence, and what's happening on the ground to give you that live feed. We're going to go straight into handouts, and you know I like to go straight into the data, and because we haven't done the data for a few weeks, if you go to handout week 24 post lockdown, I believe it is the first handout on the right hand side. Let's go through the data and the numbers because they tell us a really interesting story about what's been happening. I think a few weeks ago when we were last speaking, we had a huge volume new transactions coming to the market. All of the agents were inundated with valuations. And what we were looking to see was how that would translate and move to under offer and sold numbers. And I think what we can see here, if you go to the 31st of August and see the first column, the new instructions have dipped to the 400 numbers, nowhere near the 600-700 peaks of a few weeks ago. So either that's calmed down a bit, or it's the holiday season and people have been away for the last 2 weeks, like many of you. So we're just going to have to see what happens there, because normally seasonal trends are that when the kids go back to school, 3rd or 4th week in September, instructions go up, and let's see if that normal trend continues. Now let's move over to the under offers and to the sold numbers, because I think that's where a lot of the focus comes from our side. And I think you'll be pleasantly surprised that the under offers are still at a good number. Yes, we saw a dip last week, but we're back up to a good number. And the sales figures going through are still really strong. And when you compare the sold numbers to where we were earlier on in the year, the first few months, which were tremendously buoyant, the numbers are still very similar, if not a little bit better, which is really positive. When we move over to the 2, 3, 5, 10 million, I think that trend is a really buoyant, positive one, and a real reflection of what we're seeing at the moment on the ground, especially in prime, super prime, fringe prime, and greater London stroke home counties surrounding the M25. The amount of volume we're seeing, 2, 3, 5, 10 million, is really strong. Where you look on the right hand side at the numbers of the last 2 months, the 105, the 55, the 26, and the 5 of this month, virtually identical to the previous month, and better performing than where we were pre-lockdown. So that means transactional volume in the prime, super prime, stroke 2 million plus, all the way up to 10, 20, 30 million plus, is performing better in volume of sold transactions, stroke exchanges, than there was previously. Yes, caveat, pent-up demand for the transactions that didn't take place during lockdown. We've now seen 2 really strong months in a row. If we see those same figures in 3 weeks' time at the end of September, I think it would be fair to say that there is some sustainability in that space, and that there's a chance that that continues for a further period. So it's really clear there. I've got some further data that I haven't shared with you, but I'm just going to read to you, and that's the exchange transactions year on year in prime central London and greater London transactions year on year, like for like, are only 9% down on where they would have been a year ago. And I think the context of that is really extraordinary. It's showing that the market in certain levels is outperforming. And if you open up the handout for the annual change, it's the August housing data. I think it's the second one in your handouts. Yeah. One. So this is nationwide figures, and anyone that can't see the document, basically it shows percentage change over the last 4 years, and it's more or less hovered between 0 and 1% over the last 3 or 4 years, with a couple of half-point declines. And then we had the huge decrease that happened during lockdown. When I say huge decrease, it went down by 1%. And now we've got the rebound of August 2020 of growth by 2%, which in relative terms shows a 1% growth, obviously, because we're 1 down, we then come back as 2 up, and that shows a 1% growth. And the data shows that we're at record highs across the country now, so more homogeneous product and volume. We're at record growth in terms of the pricing index and prices being achieved across the board. As I said, we're more or less 1.5% up in terms of pricing, and I think that's just really interesting. The buoyancy, not just in terms of the levels of transaction, but in terms of pricing, that now is up an all-time high, especially in prime London, prime central London. We're actually seeing maybe 2 or 3% change in terms of increase. In prime fringe, there's a small decrease, but in prime central London, we've seen a slight increase. And I think that's really important for the risk people here, for the lending people, for the credit, for the sanctioners. I would say, let's be aware of this. We're seeing buoyancy in volume and a lot of transactional evidence and price growth in certain prime, super prime points, hotspots by 1 or 2%. Is that sustainable? Are the markets now hot, and should we be red flag in certain areas, or is there sustainability in this, and is this going to carry on October, November, December? What is going to be the effect of the furlough scheme expiring next month? What is going to be the effect of the kind of second wave we're seeing at the moment? I think we're getting to a really, really critical point in terms of the marketplace, transaction volume, and at the moment I'm being very resi focused, and we're going to discuss the investment and commercial market, because over the last couple of weeks we've seen the changes in legislation for tenancies now have to give 6 months notice. How easy is it going to be to get vacant possession? What are you asking for with your vacant possession valuations, or your valuations where you've got a tenancy in place, knowing that you can't get vacant possession for a longer period of time? How are you changing maybe your instructions or your requests, or what are you working on internally with your risk policy to take that into consideration? Any questions, please put them through, and we will answer them in any of those areas. Kevin, your thoughts on what I just mentioned, or any other areas, or anything else you'd like to highlight that you've seen over the last few weeks?
Yeah, thanks, Rob. Sustainability, you've mentioned it more than a couple of times there, and it's absolutely key in this. The other thing that is, because basically you need to know as lenders that actually that what we're seeing now is what we're going to see in 6 months' time, 3 months' time, 4 months' time. So that actually obviously when you go into a lend, you don't expect to come out of it in 1 month's time or 4. You're looking at a longer period than that. Most of you will be lending into 3 to 5 year patterns. So whilst you're taking the valuations on board today, if it's not sustainable in the 3 to 5 year, not 3 to 4 months, that's what's actually when it's going to bite you, when you actually come to the end of end of a loan period, because let's be positive and actually assume that the vast majority of loans will be paid by the borrowers, and therefore you will be hopefully putting that to one side until such time as it comes to maturity. So sustainability is absolutely key, and where we are back to the volumes that Rob's indicated there suggests that we don't really have any less information than we had before, and that part feeds into the certainty aspects of valuation. And one of the things that you'll notice on the handout 3 there is that RICS today have issued a update on their COVID-19 valuation with market uncertainty clause attached to it. As I'm sure the vast majority of you know, if not all, that the RICS has over the past weeks, months been reducing the number of categories to which that applies, to such extent that actually it only now relates to trade-related valuations. So you shouldn't be seeing it at all in the vast majority of your reports. The interesting thing about the publication, or the RICS release today, was that it actually sort of refers to consider market conditions more generally than COVID. And I just want to sort of perhaps highlight what those uncertainties are at the moment. And Rob's mentioned a couple, but clearly one of those is the revised planning situation, which the consultation ends at the end of October. And the expectation is that that will go through, and that there will be much greater flexibility to bring on changes of use to, I suspect, a lot of residential from former commercial uses. The other thing, again, Rob's highlighted, is that there's a push towards common hold rather than leasehold. Who knows where that's going to lead? Common hold's been around for many, many moons, but actually hasn't been adopted by the market. The market will dictate whether it wants to do that or not. But again, it's a period of uncertainty as to the longevity of leasehold as a class. We shouldn't forget, of course, Brexit. It's still hanging over us like a sort of pendulum, swinging one way or the other. Is there going to be a deal? Is there not going to be a deal? Is it going to be within the law or not? That is creating a great deal of uncertainty in the longer term. And going back to my point about us looking as lenders at a much longer time scale, I think that does come into play, as does, in a more short term, than the proposed changes taxation in terms of CGT on second homes or second ownership. Is that going to put a dampener on people buying second homes, particularly those perhaps who have London places and are looking to escape to the burbs with a second home? Are they going to be put off by a threat of greater taxation on that? It's not going to affect the older generation, who probably think it will be their offspring's problems to deal with the CGT aspect, but it will affect the businessman. And lastly, and again, Rob's mentioned this, the furlough. And when people come out of furlough, are they going to have their jobs? All of those sort of aspects do create a great deal of market uncertainty. However, we should be very conscious that the valuation, that there is transactional evidence out there, there is a market out there, and valuers can, okay, they may have to work a bit harder, but they can provide A, comparables, and B, sound and good valuation advice. It is very clear in the RICS's press release that they are suggesting that valuations can and should be relied upon. And to that extent, getting good valuation advice, having the right valuer, not just a valuer, is becoming more and more important. That's generally where I think we are at the moment. But who knows, we might be somewhere else tomorrow.
Absolutely. Listen, you know, huge volatility, huge uncertainty, not as much clarity as we would want in terms of market conditions. And I suppose that where that sends me is that we've got a lot of risk, a lot of credit, a lot of sanction people who listen in or view this later on. And and they need to know what's happening on the ground on a daily basis. They need to be live, which is why we're here. This is the main purpose of what we serve. What decision making and changes that they're probably looking to make, or asking the question, what could they be doing at this moment in time to manage that volatility or uncertainty from a lending perspective?
It's very difficult to do anything with any great certainty at the moment. But I come back to the fact that there is evidence out there, and if you get good advice from people who are in the market, not just people who perhaps are available, but just make sure you have good quality advice, then that's going to be your best defense against any problems. Again, lends are not for 1 month, 2 months, 3 months. They're for 3, 4, 5 years. And therefore taking a view on, well, it may be different tomorrow, actually perhaps is not the way to be looking at these things. You should be looking a bit further into the future. And lenders and risk managers have always been doing that. They haven't been necessarily assuming this is all going to go peak tong tomorrow. They're looking at things on a much more holistic view, and so they should,
Absolutely. I mean, to give a bit of insight to the audience, and we love to add value with good content here. What we're seeing, especially in the last couple of weeks, we're seeing a lot of off-market transactions take place. And it's really, really super interesting to me to see that activity. Why? Because it doesn't come with the kind of transparency and story of openly marketed transactions that you normally get. And that in itself makes the job as a valuer, or for a lending or mortgage valuation, even more difficult. It requires more expertise, more specialism, and more due diligence and knowledge to be able to then come to a decision on what the value of that asset, whether it's commercial or residential, mostly we're seeing in high-end residential, what that value should be. So just to share with everyone out there, and it's a bit of a red flag at the moment, I'm seeing a trend here of more off-market transactions than I normally see, that are getting very strong prices and very strong sales. And I would say caution to the wind, that your risk policy and your lending policy should be aware and understand that, and that you should have the provisions in place to make sure that you're doing your sanction and it's covering all of the risk mechanisms that are required. It's a real nuance. So I'm not sharing something here that is so obvious and so clear, and it's going to be very transparent when you're going to see your sanction paper or offer letter. But it's something I really really want to make you aware of, and we'll probably discuss this further down the line. Kevin, what else have you got for us, or what else you want to answer, or whatever? What other questions you want to put out there?
Well, I think the other thing, going back to the planning side of things, and it's an old hat, but we have talked about in the past, with everybody now moving into the realms of working from home, about potentially the size of a unit, and whether you need an area within that size of unit that actually allows you to have a desk, allows you to create some sort of working environment at home. And I think you can extend that perhaps to the old live-work arrangements that we grew to hate after a while. But actually, that's now something that perhaps, as we look into the longer term, might be a trend, as people actually do require that work environment on a more localized basis. I think that a lot of people are going into the sort of likes of short-term accommodation, to try and mix that, while they've got the hangover of large office spaces in Victoria is the case at the moment. But there are other areas where there's large areas, possibly even in Canary Wharf, where people are downsizing, and people will be working on a more localized basis, whether that is into the Reguses of this world or the WeWorks of this world. only time will tell. But in the interim, people are working from home and people need desks, and that is something that perhaps will perhaps come through in the next few months as this all unwinds.
Absolutely. I mean, very quickly, last questions if you want to send them through. Just to go back onto a couple of points here. The legislation around taking possession of properties from a rental perspective, and even if it's only a short-term position, is going to have repercussions, because there are transactions that require vacant possession that might not be able to get vacant possession, or won't be able to get vacant possession for a property to complete in time or within a certain period. That's going to get stretched now, and we don't know what the stretch looks like. Why? Because we don't know what the list of court dates are to get the repossessions. There's a backlog. 6 months could become 9 months or 12 months. We don't know that. So for all of the commercial stroke buy-to-let investment lends out there that are working on vacant possession transactions or with tenant in situ, you now need to slightly reanalyze what you're looking at from that perspective in timings, and what is the willing buyer willing to pay for a property that they might not be able to get VP on in the short term, and how does that affect valuation, and what are you asking for within your terms for that piece? I think that's really, really important. I know a lot of you have buy-to-let product, or a lot of you work on the special assumption of vacant possession, and vacant possession isn't now going to be as easier as it was both a few weeks ago and both pre-lockdown. It's just not, because the law goes against that. When there's a tenant in place, if that tenant doesn't want to leave, or the certain notice hasn't been served correctly, or it now needs to be served on a 6-month basis, there's going to be a challenge there. So I think everyone needs to watch that space, because it's going to play out differently to how it's played out previously.
So I think that all just plays into the fact that getting best advice is essential, both for understanding not only the value is an important part of it, but that's just a snapshot today. It's the advice as to how this property asset, not just property, will perform through the course of your loan. That's going to be the key to actually a good loan as opposed to a bad loan.
Last thing I'm going to share with everyone, in August, we were tremendously busy, and the feedback I'm getting from all the lenders and the banks that we're working with or for, they're also tremendously busy. Now, that's pretty unprecedented for August in a summer season, the holiday season. Now, the key question here is the busyness in August down to people being on holiday and short staff? Is it down to the volume of workload that's coming through that's pretty unprecedented? Or is it because of the backlog of the transactions or the work that couldn't take place during lockdown that's still funneling through? We need to see what the answers are to that question. We need to know that we're crazily busy because the market is strong and robust and has the foundations for that to be sustainable, continue, or we're crazily busy because everyone else was on holiday and there weren't enough people to do the work. A bit of both maybe, or it's the backlog that's being dealt with, and that's going to drop off in September, October. I know that all of you are coming to me with those questions. That's what you're continuously asking. Rob, you know, what is there a shortage here? Is there too much volume here? What is going on? Let's see how September works out. Notoriously, 3rd or 4th week in September, things get really busy again, and October is a really good month after the holidays. Let's see if October 2020 is a strong performing month compared to historically, which is normally one of the best months of the year. Is October 2020 going to be that month, or does furlough hit in and finish out and suddenly we see a drop? These are the question marks that are out there at the moment. It's My job to provide you with the intel, the data, and the knowledge live on a weekly basis, so you have the market insight, knowledge, and up-to-date patterns of what's going on. We will continue providing that service. Please continue asking the questions and joining. Great to have you back. So happy to see so many familiar faces. So happy that you're asking the questions that we're hopefully able to answer. And we will see you next week, same time, same place. Thank you for joining, Kevin. Thanks, Dan, for your input. Have a great week, everyone. Good to have you all back. And we'll be here, same time, same place next week. Hashtag AskRobCo. Follow us on all the platforms, YouTube, TikTok, Instagram, LinkedIn. Keep communicating, keep asking questions, keep speaking, and hopefully we are here to help you do your job as best that you can do. Thank you, everyone. Take care and have a good week.